following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the June 9th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go check out the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know I'm absolutely grateful for your presence here. And more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in right now, 877-927-6648. Of course, internationally, 727-445-1044 is the number. You can send me an email, steve@tfnn.com. Just put radio show question in that heading. Then I'll see it inside the Tiger's Den. Any and every ping will do. So let's go ahead and get this show started on fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow trade up 91 points at 21,273. S&P is up about 5, where the NDX 100 is down 1.2% or 71 buckaroonies. Leading the charge to the downside is Apple. We'll take a look at that stock chart. I'll show you something that's kind of cool that you can pay attention to. Russell 2000 up 15 points. That's up 1%. The semis are down 29 points. New York Stock Exchange up 67. Gold is back $9 right now. Silver down 21 cents. That spells trouble, double trouble. We'll go take a look at that. Light sweet crude up 30 pennies. Lead the charge here to the upside. You've got SVB Financial Group up $7 and change. 4% to the upside. Sherwin-Williams painting the town green up $6 and change as well. Argan Inc. up 6. DuPont Fabros Technology up 5. Grainger WW up 3% or $5 to the downside. You got Priceline, Amazon, Google, Domino's Pizza is getting its licks in there, down 3 and almost 4% or $8 to the downside. So let's begin the day. Let's begin the day with Apple. Right. Well, so the NDX 100, but we'll start it by taking a look at Apple, which is down 3. Let's look at it in a couple different ways out here. First, let's go take a look at our market profiles on Apple. This is the daily set of market profiles. Priced at the bottom of the box, 151.32. We're trading at 151.22. So we're trading right below that level. Price inside of Apple has not traded down below the bottom of a daily profile. It did for 3 days back here on April 19th, 20th, and the 21st. That's it. Only 3 days. So what happens when you break down below that? Then that's telling you that you've broken a key level of support out here. Now, if I put the weekly up on our screen as well, let's do that. So we have our multiple time frames out here. When Apple was trading below the bottom of its daily profile back here in April, you can see that it makes sense, right? When we put the weeklies up here, it makes sense because it found support at that point of control. That's a box, that's a level, that's at the center of the box, but it's also, and you know that's that box where that line is formed in relationship to the top or bottom is very important. Here was slightly closer to the bottom. So, and that point of control is both where buyers and sellers, it's where all the traffic is, where they're most comfortable with price. In this case here for Apple, if it closes below, and there's no reason to think that it won't, but I don't really know, right? The end of day, 151.32, you close below that, not like 151.30, but you close below it. Then that says 146.70, 145.04. You'd say it'd be the 146.70 that would become its price target out there. Now, that's one way of looking at Apple. This is a cool way of looking at it. This morning we weren't here, but today's action has driven us here. And this chart, if I can bring it over here, there we go. Now you're going to see on this chart here, I look at the NDX. Well, good Lord, there we go. We got the NDX 100 chart on the top of the screen, Apple on the bottom. The money flow indicator, it's a tool that I use. Really specifically, I found that it works best for Apple than anything else that I found out there. That doesn't mean I've gone through 3,500 issues out there. But what I can share with you is it works really well with regard to Apple. Now, you've also got Stevie's red lines on the chart. You can see the island bottom pattern that formed in Apple back in 2016. There was a big island out there. You don't think those islands work? Yeah, they work pretty well. Do they work all the time? No, but you don't ignore them. Back to Apple, really back to the bottom panel of my screen out here. If we just come and take a look, I'm just going to take a look here at the time period. We'll go back further, but back to like December 20th, 2016 here. No, actually, I take that back. Come into the time period here of November 9th, 2016, when that money flow indicator at the bottom of my screen here starts trading above the zero line. That's the blue line on my chart here. It's actually very hard to be short Apple to the extent that you're going to go ahead and gauge Apple and the NDX 100 in the same syllable out there, or breath of air. Very hard to be short Apple when that money flow indicator is above zero, just as this chart here shows. Now, when you get below zero, just as it did back here in April, that's when typically you'll see Apple either move sideways or start moving lower. That's when the momentum, money flow wise, to move lower is in place. You can see that's really what occurred here between that time period of April 10th, in essence, all the way up here until about May the 5th. May the 5th, that tool, that indicator gets back above zero. And now today, first time in a while, that we are now down below zero. And you can see here, if you come back to the time period where there was an island top pattern in the NDX 100, by the way, island top also eventually formed inside of Apple. But if you come back here, I'm looking at the time period of April 18th, 19th, 18th, 15th, April 15th, 16th, April 15th, and 18th out here. You can see that tool, that indicator gets down below zero, and you can see that Apple was under some real nice little price erosion exposure, as well as below Stevie's red line out there. So there's using a couple of tools. So what this suggests to you and I is that Apple's going to go down into that weekly profile level that we looked at, which is in the 146.70 level. That's going to be confirmed with a close below the bottom of the box out there again, which is 151.32. So how do you like them apples with regard to a cool set of tools that you can use on Apple and gauge, especially if you are an active trader of that. You're trying to get a feel for whether you should be long or not, and I mean, I think it's pretty cool. I was wanted to share it with you. Okay, so back to the market. Well, let's continue on with the NDX 100, right? And let's do the NDX 100 in a number of different ways out here. NDX 100. Well, what's one way to look at it? I know I'm going to switch. Shouldn't have eaten so close to the show, but I didn't have any choice. When we come back from this break, we're going to look at the daily chart for the NDX 100. Then I'm going to show you an interesting set of patterns. The NDX 100, we'll go back in the year 2000, and then we'll bring it forward to 2007. Steve Rhodes with TFNN. We'll be right back. 2007, 2017. What am I talking about? Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets.
The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Hey, want to see a cool set of charts out here? Hey, of course you do. That's why you tune into the show. Actually, let's take a look at NVIDIA out here. If you take a look at NVIDIA, you know, it's got one of our favorite patterns today being a seventh wave move. Now, that is off of this low right here back on, looks like April the 14th, 2007. So we pay attention to those seventh wave moves. That'll certainly tie into the show today. It ties into it every day. And at this stage here, you're getting a bearish reversal signal. If NVIDIA closes below 151.64, I think that's Stevie's red line out, 151.61 out there. And then then you have a confirmed move down to about the 135-ish area. That would be the first level to pay attention. But the cool pattern here is, and I wish I could prove this. So this just is Stevie's theory out here, but I think it's a damn good one. If you've ever wondered what it looks like for a trading desk to get orders to sell and do it in an orderly way, an order to be orderly, this is what it looks like. This is a 5-minute chart that we're looking at inside NVIDIA. Not to spook anyone, even though you're having a nice move. At first, you get that seventh wave, so you would know to be cautious around those seventh waves out there. And then when you actually want to see what's going on inside NVIDIA, put up on a short-term chart. It doesn't have to be 5 minutes, but 5-minute chart's pretty good to look at. And just look at that linear move. By linear, a line, a linear move to the downside. Nothing big, nothing huge in the way of volume. Just a trading desk that says, don't let this get out of control. And when they're out of the position, or when they do finally get out of the position, it'll probably just be one big burst that we'll see to the downside. But in essence, that's what it is that is going on. So it's just some trading desk. Many others are just holding this, no fear. And I know how I hate using that term, but this is what it looks like to see a large desk get out of position. And how do I know that? I don't. It's just a Stevie theory. But as I said, It's a pretty good one. You can see the same thing happening as well to the upside, but it's usually to the downside that you see this occurring out here, and that's what's going on inside of NVIDIA. Back to the daily chart on it, just to go ahead and take a look at some daily boxes out here. The daily box inside of NVIDIA, that's the weekly box. The daily box here doesn't come into play until about the 132 to 139 level. So it's at 132, 139 level. I think it was 135 on my other chart. That is where NVIDIA is headed to, and we'll just simply take things one day at a time. Yeah, there's some pretty good volume coming out of this today, 57 million, but you see that just a nice orderly fashion of a trading desk executing their orders, or at least so I believe. Now, back to the NDX 100. Let's try to keep on pace here. Inside the NDX 100, to tie it all in, if we go take a look at this, you and I looked at this yesterday, so it pops up on my chart. And yeah, we are in wave number what? We are in wave number 7. Letter G, when you take a look at it on my chart. That's what it was able to do this morning, just by the hair of its chinny chin chin. Actually, I think we were in wave G yesterday, so it just extended to today's intraday high. So what does this say to us? Plus, you've got a price relative strength divergent pattern. That was confirmed with the evening star a couple of days ago. So the mere fact that we're seeing a pullback inside the index 100 was broadcast to you, really broadcast everywhere, but especially here at TFNN. Now, what this says is we should see a pullback in that 5,700-ish area. That Stevie red dashed line on my screen. That's the first one that we would anticipate as to where it will head to. Of course, it's going to be all about what goes on in the futures market per se, and so we'd be looking for the targets there more so than what takes place inside of the cash industry. Just we have more information available at our fingertips, and you and I like to use more information. Now, the other cool chart, I said we go back to 2000 inside of the NDX. Where did I put that chart? Where did I put that chart? It's just going to pop. Okay, so here we go. Come on over. The system's a little slow out there. I don't know why. I'm not slow. Here, we're going to go take this all the way back into 2000. Because at this stage here, an assumption would be, or could be, that we're really in that same type of mode with regard to the direction of price. Let me just here go ahead and move this in a bit. We'll try to get there sooner than later, because otherwise you're going to go to sleep. I'm only in 2005. For goodness sakes, get there already, buddy. Get there. Okay, we're almost there. Here we go. So if we take a look at going back here to the 2000 run-up into the highs of in March 27, 2007, and where we went to the 4,800 level. And if I start all the way back here in 1999 when we were at about 2,200, where in essence we saw price double. And this is where these seventh wave moves are certainly worth paying attention to, because just simply off the August 10th, 1999 level, price runs up into wave number 7, pulls back as it should, runs up. In this case here, it actually made the 8th wave. But we won't tell Basil or Stevie Wonder singing the key of G that it made an 8th wave. But we did see a bit of a consolidation in that final burst out here. And the question is today's move, 7th wave, is that a final burst? Well, I guess I don't know. Do I think that it is? Absolutely, positively not. In fact, today, remember, when I open up the show, I talk about how there's a gift in every situation out here. Today, and what's going on inside the NQ, it is a gift. This gift is so gift-wrapped out here. The key is for you and I to identify where that next bottom is. If you're wondering where it is and when it is that you're going to back up the truck, it is at this next bottom inside of the NDX 100. We're very likely to see another 7th wave move to the upside. Where that's going to take us in price, I don't know. If we are in a similar period to where we were back in the 2000 time frame, then we're going to, and likely, the pattern that did show up here in 2000 is my price relative strength divergent pattern. It's not present as well. It is present in the daily chart for the NDX 100. I apologize. It absolutely is. We just looked at it. But I don't think this is the end of the move. This is not even close to the end of the move out here, and it's a gift. But you can see after these 7th waves, you don't see substantial pullbacks. 1, 2, 3, 4 days, 5 days. This one here, in essence, was 3, 4 days. There was a bit of a consolidation out here, but that's how these patterns work. It's very cool. These things recycle. We can see here coming off of, by the way, election. In essence, not truly the election, but November 7th out here. And you just simply start counting the waves. Get to the 7th wave, you have a 1, 2, 3 day pullback. And potentially that's all we're going to get out here. It's just a short pullback in this strong bull market. We got up to a nice little 7th wave move out here back in March 16th. We saw, in essence, just a few day pullback and then a sideways-ish move out here. So is that what you should expect? Yeah, I do not expect that the retracement and pullback that we get out here is going to be of substance. I don't know what I mean by that. It's not going to be substantial. It's not going to be gargantuan, or at least that it shouldn't be out there. So we should see a little bit more of a pullback. We've identified some price targets inside of the NDX, and we'll continue to monitor that as things unfold. Now, for Tom, who wrote in, and he put in big, bold letters, radio show, we're going to go take a look at your email, Tom, when we get back from this break here. And the question is, he's back in the J-Nug and Nugget and wondering about just taking profits today or maybe holding it over the weekend. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
folks, so for one of our viewers out here, for Tom, we're going to go take a look at, and what Tom is trading is the nugget, the junior nugget, and USLV, silver out here. So let's start off with the nugget, but the way that you and I are going to look at the nugget is to look at the GDX out there, because I think that will give you the better picture. And so as we take a look at it, what we can see is we had that nice big move higher on June the 6th. And good volume behind that move, 97 million shares. Today, so far, you're pulling back with 16 million shares right into the breakout. And that breakout is really the high, if you will, of the trading session from June the 5th. So price has just come back to that. This is where gaps are your friends. Has come back to the breakout area, has done so on light volume. And I would say, Tom, just from only looking at this tool, volume, breakout volume, and how that would work, and what that means is prices now come back to support. And if you close above 22.89, that says, yeah, there's no reason to not stay in it. Let's add another factor to it, the market profiles out here. You're back below a level that is controlled by sellers. The reason that we say that it's controlled by sellers, let me get rid of the it's not Apogee out there, 22.89, but and the reason why we say it's controlled by sellers is because that point of control, 22.69, closer to the top of the box, 23.43, and so if we're wrong that this was not a good buy, instead it was good buy to price, then what we should see is the full exploratory level of price moving down to 21.47. So there is your reward to risk. Now, what other factors can we look at that might impact the direction of the miners or silver or gold? Well, there's a couple of things, right? Well, by the way, here, one last thing on the GDX. If the GDX closes above Stevie's red line today, that's priced, Tom, at $22.99. Just think Agent 99 from Get Smart out here. If it closes above $22.99, it would be a signal that staying in that position would be the right call. But because you're such a intraday-ish type trader out here, it's like you could get back into this early Monday morning. But above $22.99, I've got to answer your question. Above $22.99, I would not issue an order to sell. But again, you're kind of short-term oriented trading versus I'm going to hold this thing here for a while. For those of you that are holding it here for a while, you certainly want to see it close above $22.99. Okay, so what else is next that you and I need to go look at? Of course, we've got to go take a look at gold and silver, and we need to go take a look at the Japanese yen. So as we go do that, I'm going to do a not an all-in-one, but a two-for-one, buy one, get one free, a BOGO out here when we take a look at gold. Now, I've got the continuous contract up on my screen. For these purposes, it doesn't matter. And I have the same thing with regard to the Japanese yen down below. Now, the beauty here for you with regard to should I stay or should I fold is so far what we've seen today inside the Japanese yen is a test and a rejection thus far of Stevie's red line. 0.9050 is a number where you'd like to see the futures contract for the yen close above. That would be a test and a rejection. That would be okay. Unfortunately for you and I, not unfortunately, fortunately or unfortunately, however you want to take a look at it, you really want to see gold close about 1276.70 and you're 1271.40. So that next $5.30 is really important to you. If it closes above that, then at this stage, prices just simply come back and has tested a level of support. And if price closes below 1276.70, let me tell you what has occurred the last two times that you and I have seen this rodeo play out. And it's not good. Because when I say it's not good, it says that price continues in the way of gold itself, not the mining equities, but gold itself would continue lower. In fact, what I'll say is it is yesterday. I think we had a question from one of our listeners yesterday, the day before, about blow off tops, and it's capitulation moves, right? I mean, so I think that's probably the better terminology. Even though on this chart here it says blow off top, it really would be kind of a capitulation move out there, an exhaustive capitulation move. And the last two times that we've seen gold try to take out its swing points have been with pretty darn good bars out there. Just like the one from a few days ago. But what you can see is that once gold came back just after a few days and closed below Stevie's red line, it turned into many more days of lower closes inside of gold. So that certainly is going to put pressure on most, not all, of the mining equities out there, and then put some pressure on JNUG and NUGT and anything else that you might be trading to the long side out there. So if you were to, I guess here, this would be the easy way to look at this chart, the interpretation. If the yen futures continue lower and they close below Stevie's red line and gold closes below it, would I hold it over the weekend? No. I'd even consider closing out my more intermediate term type trades inside mining and taking my profits and then maybe trying to come back in on see what action takes place on Monday. So, Tom, thanks for writing. Have a good weekend. I hope that helps. Oh, you mentioned USLV or UN, something like that. Let's go take a look at silver for you because silver has its message as well. Give me a moment here. Let me switch charts. Let me go back here. We'll pull up silver. We'll do that with the NVIDIA chart. We'll just go ahead and pull that up and take a look at the current contract for silver. So give me a moment to do that. We'll get back up there because that decision is going to be perhaps slightly different than what I gave you. At least I can give you the numbers to be paying attention to with regard to the silver contract, and then you can make your decision with regard to the ETF that you're trading. There we go. So right now, yeah, so that's also not a good thing, right? We talked about how it was a good thing yesterday. Yeah, yesterday was a good thing with regard to silver. Silver, Stevie's red line, Stevie's blue line, that's where that price oscillator at the very bottom panel of my screen was at that zero level. And yesterday was a bullish signal for you and I. It would again be bullish today if silver were to close above 1727. 27. You're trading at 1722. Somebody out there might be saying, give me a break, Steve-O. Can 5 cents, 5 little pennies really make that big of a deal out here? The answer for me is, yeah, it makes all the difference in the world. Because if you have a falling price oscillator below zero, that's not a bullish signal out here. That doesn't mean things can't change in a heartbeat. But that's the beautiful thing. If they do change in a heartbeat and silver takes that out and gaps up or does something on Sunday evening, well, you can get right back into it because you're right near the beginning of that next move to the upside. On the other hand, and you can see this red arrow off here to the left-hand side last time that we saw silver's price oscillator turn down below zero. It was not a pretty sight out there. So it's very possible, in summary, that the move from a few days ago was an absolute capitulation move inside of gold and silver. I don't care how strong it looked out there. What you and I are doing is just simply looking at the patterns. So, Tommy, I hope that helps you out with your trade. Have a great weekend, and we'll see you later. This is Steve Rhodes with TFNN. I'll go check out those emails, see what else it is you might want to look at, or send me an email, or give me a call. Love to hear from you. Steve Rhodes with TFNN. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. So for one of our denners, Kaz in the Den said, hey, Steve-O, the yen is bouncing and gold did not, or something like that. But it's really helpful here, Kaz, if you take a look at a short-term chart. I think what he's referring to, folks, is the correlation. Directional correlation, not tick for tack, so to speak, out here, pip for a tick, anything along those lines, just simply the directional correlation that exists between the two. And what you will see, causes is in fact, that correlation still exists. When we take a look at the bottom, in essence, that took place so far this morning in gold, 920. Right, that took place at 920. We can see the same thing was true with regard to the 30-year Treasury. Why does this work? I don't know. But what I can share with you is you are definitely trading the yen currency out here. I mean, if you're inside gold, if you're inside now the mining equities, maybe not so much, but a little bit. But certainly the actual metals out here, if you're trading one, you're trading the other. Which one's the dog? Which one's the tail? The dog is the yen. The gold basically is the tail. Which market is larger? The yen market out here. And so you can see just simply the correlation. You can see how the yen started moving up at the same time. So too did treasuries. So too did gold. So that correlation is out there. As Tom likes to say, I'm talking about Obi-Wan Kenobi, in spades. There's no question here. If we were playing hearts or spades out here, we would see that correlation is in fact intact out there. So that says you can also then go to the daily charts like we did when we took a look at, just try to understand where significant levels of support are. Oh, geez. I don't know how I got to this page, but I did. If we take a look at the S&P 500, I must have gotten here for a reason. And not that I can recall, but certainly we are here for a reason. And we take a look at the S&P 500. We're taking a look at horizontal trading ranges. The blue ones out here are the daily. And you can see that we're at the midpoint in the daily horizontal trading range boundary area between 23.43 and 25.19. The midpoint is 24.31. We're trading at 24.32 as we speak right now. However, on the weekly set of numbers, and daily are going to be different than weekly, which are going to be different than monthly. Why? Because we're using the candle close or open. And a weekly chart is not going to coincide with 5 daily closes, and a monthly chart is not going to coincide with 4 or 5 weekly closes. Hence why we have some different levels out here. We'll see that in the S&P 500, that price target of 24.45 was hit. It was hit earlier today. That's a potentially significant level out here. Until price gets above it, it becomes a significant level of resistance. If price closes above that, then you're looking at price moving to 24.64 and then 25.19 out here. What happens if price pulls back from here? Well, the ultimate worst case scenario is getting all the way back down to about 23.59. That's the monthly horizontal trading range boundary line out here. That would be kind of like worst case scenario. That would be 40. That would be about 80 points away from where we're trading. Really wouldn't be that big of a deal out there, and would be the ultimate in buys. Is that going to happen? I don't know, but I just happen to be there. Let's take a look at the do I have the NDX up here? Let's see. Yeah, I've got the NDX. Since it's the NDX that we were talking about, what we can see out here in just one fell swoop, in one day, and you're looking at the right-hand chart of my screen here where you're seeing the daily horizontal trading ranges, it's pulled right back to support, 57.67. It does say, Mildred, that this could be it. Now, I don't even know where the Mildred came from because that's not even – who is it? It's the guy from Sanford and Sons. What was his wife's name? That somebody always tells me, and I always keep forgetting out there because I never watched the show, but you know what I mean. Prices come back to support as we – Thelma? No, it's not. Couldn't be. I don't think it was Thelma out there. What was her name? In any event, 57.67. So prices come back. It wasn't Alice. That would have been Jackie Gleason. Anyways, 57.67 is the level support. What happens if price falls below that? It was Elizabeth. There we go. I'm coming home, Elizabeth. That's what I was thinking. God, I should remember that. I don't know why I don't. If price falls below 57.67 in the NDX 100, that's going to open up Pandora's box. Pandora Radio, by the way, having a good day. But in Pandora's box inside the NDX 100, that gets you to 56.07 would become the price target. 56.07 to 56.14. What you need to know right now at 1:47 in the afternoon is the NDX 100 has hit a level of support. And there's one thing we know. If, in fact, we're repeating kind of a move from the year 2000 out here, do not anticipate a whole lot of erosion inside of the NDX 100. And if we do get a 3-day pullback, just simply say thank you for this beautiful gift. Back up the truck. Go all in. Go more than all in. Go doubly all in. No, use proper stop management out there. Just having a little bit of fun with you. But it will become a good buying opportunity. All right. I didn't see any other requests out there, either inside the den or via email. So that says we ought to go look at, I don't know. What should we go look at? What else is there really to look at out here that I can provide you with good info? Oh, I know. Why don't we go see what's going on with the New York Stock Exchange? Man, it's still long and strong out here. There's no message of, hey, I ought to sell the market inside of the New York Stock Exchange. I know you say, well, what are you saying? I'm saying that the reading of the summation index is still above zero. It's printing out at 89. You'll see it ticking up and down out there, 89 even Steven as we speak right now. As long as that is above zero, there's no sell signal. All that's going on is Basil has been just a genius. The professor and Marianne and Gilligan and everybody else, but of just simply the market rotation that's going on. And that's really what the message would be coming from here inside the New York Stock Exchange. Now, you close below zero, then it's a different signal that would be out here. But at this stage of the game, New York Stock Exchange, to the extent that you want to use it, it's looking bullish, not bearish. If I go take a look at the advanced decline oscillator readings out here, well, I'll be, yeah, exactly. New York Stock Exchange, bullish. The NASDAQ Composite, bullish. The Dow, bullish, all above zero. All above zero. Very interesting. Yeah, even the NASDAQ Composite as we speak right now. All right, so what else do we want to go ahead and take a look at out here? Oil, light sweet crude. Why don't we go take a look at light sweet crude, see what it is doing out here. Let's go take a look at its profiles. Let's go ahead and do our synthetic contract out here, see if we can figure out what it's doing. It certainly is bouncing it is trying to get above resistance. Resistance really being $46.16 out here. Why do I say that? Because that is the top of the 240-minute profile. We can see the price earlier this morning at about 11 o'clock. Price was able to get above its 60-minute. It's hourly market profile. Now price is coming back and testing that level 45.86. But where price ran into resistance is why you want to take a look at these 4 different time frames. Once it got above a resistance zone in the hourly chart, then it moves up to resistance inside of light sweet crude. Hey, we've got a caller on the line, Mike in Ormond Beach. Mike, thanks for calling. Thanks for holding. How are you today?
I'm doing great, Steve. I'm off work for the rest of the day.
Well, perfect. Well, just sit with us for a few moments here while we go to this commercial. Tell me what it is you want me to look at so I can pull up that chart.
Steve, this is regarding one of the latest webinars you did about identifying the beginning of the bear market.
Got it. Okay. When we come back, we're going to go back out to Ormond Beach. We're going to speak with Mike. Steve Rhodes with TFNN. Dow's up 59. NDX is down 110. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest live programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 9 hours a day starting at 8 a.m. as John Logan kicks us off each trading day with the Global Market Pulse. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Mondays and Fridays, catch live trading on the Nadex platform with host Tom and Tommy O'Brien, along with Gerald Martin on the Bull Bear Binary Option Hour. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN, educating investors. Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks, for our last segment. Let's go to Mike in Ormond Beach. So, Mike, you're asking a question about the a recent workshop that I did, which was how to identify bear markets. How can I help you? Okay,
I just would like a kind of like a refresher on that. When you had the two there was an oscillator unchanged line.
Right.
And I think, didn't you have another moving average that was providing the crossover to give us the signals?
No, it was a second oscillator unchanged line using different time frames. And in that case, it was based upon a weekly and a monthly chart that we were looking for those signals.
Okay. So the one is the oscillator unchanged line, and then it's another.
They're both oscillator unchanged lines. What they are is they're two different time frames.
Okay.
Two different time frames to try to identify that crossover. And both of those are present at the beginning of every bear market. And what you do is you take a look at it's just the same type of progression that I go through when I take a look at market profiles. We go through each different time frame to help us identify areas of support or resistance. If we see that pattern unfold on a daily basis, then we go over to the weekly to try to understand what's present there. We always go search for levels of support to see if they fail. We look for things to recycle. We look for price bounces that never get back above the primary oscillator unchanged line that we use. So there's those types of different tools. We typically will see that price relative strength divergent pattern applicable in all of the indices. Or at least most of the indices. If we take a look inside the NDX 100 right now, that pattern is absolutely present. So from a daily perspective,
right.
If I go ahead.
Okay. Well, my problem is time. I work a lot of hours, and most of the charting services that I use, I don't think I can pull up. I took one of your other seminars also. Mm-hmm. And I can't actually build the oscillator unchanged line on it, but I was wondering if there's any other moving averages that you have found that you could combine two of that would be very close to that.
Sure. No, it's a great question, and if I could, the answer is no.
Okay.
Which is why I ended up having to build the tool itself out there. So there's not there. I've seen people try to emulate it with different moving averages out there, but it's like it's close but no cigar. And so it's just and because there's such a release of information to both you and I with regard to the utilization of that line, and especially when the price oscillator itself reaches zero, just as you and I, or we were today, taking a look at silver. Mm-hmm. Yesterday's move in silver was the exact type of bullish message that you like to see when that price oscillator, the very bottom panel, it's reaching the zero level, because it just releases a world of information to us. It doesn't guarantee us of what's going to happen next, but it puts the probability so high as to the read of what the market is doing out there that it makes making a decision, a decisive decision, that much easier. So I hope that helps. The bottom line is, the main thing I was wondering was what two, lines, and you pretty much told me it's why don't you go ahead, give me a call if you want. 407-383-3100. Folks, have a great weekend. Sorry it's so quick. The show is over. Stay tuned. David White, our favorite polar bear, is up next. Have a great weekend. We'll see you on Monday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.